Let's start out with the economy this afternoon, where it seems to be, at least here in Washington, what everyone is talking about. Jobs, a lack of jobs, on everyone's mind. And so it seems to the deficit and how to shrink it. Just a little while ago, President Obama and Vice President Biden kicked off yet another meeting with top lawmakers to talk about just that in the latest round of talks on coming to an agreement on raising the debt ceiling. Well, one person who won't be in today's meeting but does want Obama's job is Texas Congressman Ron Paul. Yesterday, he got into some heated exchanges with Fed Chairman Ben Bernanke over the way Congress and the Fed have dealt with some of these problems during the last 3 years. Now, he also asked Chairman Bernanke about what he sees as an important fix to some of these economic woes. Gold. Take a listen.
Do you think gold is money?
No.
All right, so let's talk about gold with Scott Carter, CEO of Goldline. Scott, Bernanke also talked about, a new stimulus program being in the works, an indication the Fed is considering a third round of quantitative easing. And shortly after he made these remarks, the markets seemed to react with gold prices shooting up, breaking records even. So what's going on here?
Well, it's the same story, Christine. And by the way, thanks for having me on the program. Every time that Federal Reserve Chairman Bernanke talks about stimulating the economy with more money, gold goes up because investors know that that means that our current dollars are going to be worth less tomorrow than they are today.
It seems like a simple breakdown there. Another interpretation of the Fed I want to share with you, this one coming from Russian Prime Minister Vladimir Putin. I want to play this for you, what he had to say, and then I'll get your response.
Fortunately or unfortunately, we do not print reserve currencies. But look at what they're doing, acting like hooligans. They're switching on the printing press, tossing money around the whole world, fulfilling their primary needs. They say monopoly is bad, but this statement concerns only someone else's monopoly. Well, there's nothing bad about their monopoly, the monopoly for printing money, and they're making the most of it. But we cannot afford it. We cannot shift all our expenses to budget deficit.
All right, Scott, so what do you think of this? I mean, the Russian Prime Minister calling the Fed hooligans for, this idea even that's being considered, another round of quantitative easing.
Well, that's right. Well, I wouldn't go so far as the name calling, but I think that the core, the point is that we are stimulating our economy. We're paying our bills by printing more money. And the whole world is doing that, Christine, not just the U.S. The fact that the EU is bailing out these countries, they're bailing them out with money that they don't have. So the bottom line is we've got a sovereign debt crisis around the world, here in the U.S. and certainly in Europe. And countries that have their own currency, the way they get out of them is to devalue the current currency to pay the future liabilities. It's not good for people that are holding these currencies, but it's the only way forward, if you will, to pay future obligations. It's a terrible thing to state, and it's one of the big challenges we have not only in the U.S., but you're seeing it unfold in many countries around the world. That's why many people are looking to hard assets, all commodities, but gold and silver in particular.
You're saying we're seeing it unfold around the world, and I think certainly an example of this is in Switzerland. They were the last country to abandon the gold standard. I think that was back in 2000. And already their parliament seems to be getting ready to talk about some serious steps to return to it. Your thoughts about this?
Well, I think it's interesting. Switzerland is still, as a relation to their policy, their monetary policy to the gold they hold, is very high. It's around 40%. It's no coincidence that the Swiss franc is a very strong currency right now. The fact is that the experiment we've been through, the fiat currency for the last 40 years, when President Nixon took us off the gold standard, has not worked out well. We have devalued our paper currencies. Gold has gone up. And that's why there's consideration from many, not only Ron Paul, but Steve Forbes and others, to talk about having some sort of modified gold standard where fiat currencies are anchored by hard assets to limit the printing of them so that we don't continue to just devalue the currencies that we have today.
You know, just kind of looking at what happened yesterday, we showed you an exchange between Ron Paul and Fed Chairman Ben Bernanke. Certainly no love lost between those two. Ron Paul has often called for, getting rid of the Fed altogether. But he also, talked about the Main Street and Wall Street and the $5.1 trillion that was spent, and it didn't go into the pockets of, you know, people without jobs or people losing their homes. It went into the pockets of some of these big banks. I want to play another exchange between the two, and then I'll get your response.
The $5.1 trillion didn't go to the consumers. It went to buying bad assets. It went to bailing out banks. It went to bailing out big companies. And lo and behold, the consumer didn't end up getting this. They lost their job, and they lost their houses and mortgages, and they're still in trouble.
You're mistaken in saying that the Federal Reserve has spent any money. You say $5 trillion. We have lent money. We have purchased securities. That's not buying. That's not dissipating, you know, the money. We've gotten all the money back.
Chairman Bernanke went on to say, you know, that the Fed is in fact, you know, a moneymaker for the U.S. government. Now we've got you here. You work for Goldline. Obviously, you've got a vested interest, Scott. But kind of talk about this as it relates to what we're seeing, you know, previously with the bailouts and you know, the direction that this country is going.
Right. It's a good point. Let's set gold aside. I think both of the individuals, Bernanke and Ron Paul, were correct. Ron Paul is right that the average American has not seen the benefit of the stimulus money that has been put to good use. And we're seeing that in unemployment rates. We're seeing that in lackluster GDP growth. And it's impacting middle America, Main Street, very significantly. They haven't reaped the benefits of the last 2 years. Chairman Bernanke's point in that they bailed out the financial institutions and they have them on more solid footing, that's correct as well. So in many respects, you've got Wall Street that's been successful. You have large conglomerates that are posting record earnings, but yet Main Street, middle America, you and me, we are not feeling it in jobs. Our income's not expanding. Our home values are still declining. It's very much a different story when you talk to the man on the street. And I think what you heard in that synopsis is Ron Paul representing the common man and Ben Bernanke representing Wall Street. And both can be right, but it still doesn't get us where we need to go in turning this economy around.
And it is pretty interesting when you look at the markets, as we mentioned before, people with a vested interest in the markets and, you know, the value of their holdings. Gold certainly went up. To what extent, though? I mean, here we saw Bernanke, who says he doesn't consider gold money. What would happen, do you think? What would need to change, probably drastically, in order for his opinion, for the opinion of so many others to change?
Well, I think that the Federal Reserve and central bankers will be the last to admit that gold is money. They are vested at the fiat currency level, paper money, and the good faith and credit of dollars. But when you look at the street, when you look at the financial markets, when you look at investors, clearly gold and silver are functioning more than just as a commodity. They're seeing it as a hedge against a declining dollar. So even though it's technically not a currency, it's certainly being played as a hedge against the dollar and declining fiat currencies. And I think that will continue. So the market has a funny way of determining what gold and silver's real value proposition is, regardless of what Federal Chairman Bernanke says. And I think Ron Paul stated that. The average American, they think gold is money, even though you can't go down to the street and literally use it as minted currency today. Will there be a time when that could happen? I don't know. I think that the real story is to stop the spending, stop the declining dollar, let's get our debts in order, let's get our deficit spending in order, and then you've got a different story on the strength going forward for the dollar.
All right, Scott Carter, CEO of Goldline. Interesting perspective there. Thanks so much.